Okay, welcome back everyone. I hope you all got a nice cup of coffee or tea. Okay, so in this session, we're going to continue with learning Unit 8. So we've looked at how to record your salaries in your journals and then take it to your general ledger. Now, we said salaries is more your monthly type of expense, and now we're going to look at your wages, which is more based on your weekly expenses. Now, the difference between this is it's a similar process you're going to follow. The only difference, or the main difference, is the account names. Instead of salaries for creditors for salaries, you're going to have creditors for wages, and for example. And then the other thing is salaries we would do once a month, whereas this we're going to now do on a month-to-month basis. Okay. And then the other thing that happens is because we do wages on a weekly basis, depending on what week we are busy with, you will potentially have to bring in the opening balances for your general ledgers to try and reconcile them. Okay, so that is the main differences between your salaries and your wages. Now, let's quickly look at the different steps. So the first thing is you complete your wages journal, but on a weekly basis instead of a monthly basis. And then you would take that to your general ledger, then your net payments. So your cash book you would also do on a weekly basis as opposed to a monthly basis. You would post it to your general ledger similar to what you would have done with your salaries. So that is a weekly basis. And then at the end of the month, you would make all the payments for that wages at the end of the month. So you won't necessarily make the payments every week. You would generally add it up and pay it at one stage. It all depends on how the business works, whether they pay it on a weekly basis or whether they pay it once a month. And then you would pay it and you would also post it to your general ledger. And then at the end of the month, you would normally record your EMP 201 as opposed to weekly basis. You still do it on a monthly basis. So we only submit the totals to SARS once a month. Okay, so that is basically the main differences between the two. Okay, now let's quickly look at what it looks like. You'll see it looks very similar to what the salary journals were, except here in the beginning, we've got gross wages, which is made up of our normal time and overtime, whereas our salary one was made up of basic salary, any overtime, not overtime, any travel allowance, any commission, any bonuses you receive. So you'll see the types of income or money you receive are slightly different. Now we said normal time is the normal number of hours you would work per week, and then overtime is anything above the normal time. So if we say normal time is 40 hours, everything above 40 hours would then fall into overtime. Your gross wages is then your normal time and your overtime added together. Your pay as you earn UIF would be based on your weekly amounts. So SARS issues tables which calculate this. You can calculate on a monthly basis or weekly basis depending on how you pay your employees. And SARS have published tables where you can just get those amounts from. Then your pension fund would generally be a weekly contribution based on their salaries, and your total deductions would be exactly the same. You add the pay as you earn UIF pension fund. Okay, and your net wage would be your gross wage less your total deductions, similar to our net salaries. And then your employer can contribute again to your pension fund, and they have to contribute to UIF and STL based on our statutory law. And the same information applies. It's 1% of your UIF remuneration or your STL. Okay, so that is exactly the same. and then your wage journal, your number is just a WJ as opposed to SJ for salaries journal. Now, if we post that to our general ledger accounts, the main difference is instead of taking it to salary expenses, we take it to wage expenses, and then the other accounts looks the same, and then your net wage goes to creditors for wages as opposed to creditors for salaries. But the other account names are all the same whether you pay salaries or whether you pay wages. Okay, so what we're going to look at now is, before we do a practical example, is what does your EMP 201 return look like? Now, this is the return that we submit to SARS. We do it electronically. You capture the information based on what comes out of your payroll system or your general ledger accounts to do the entries. Now, at the top, you'll see employee details. Now, that is your employee name, their registration number, and then their pay-as-you-earn reference number, SDL number, UIF number. Those are numbers that SARS would assign to them. Then they give the person that is busy doing the declaration or submitting it would complete their information. Now, here at the bottom, you would see we enter the pay-as-you-earn amount, the SDL amount. If there's any penalties, you would have employee tax incentives. So that is, if you employ an employee between the ages of 18 and 29, SARS actually gives you additional incentive to employ them, and you get an additional or deduction from your pay as you earn so that you can pay less pay as you earn over. And then you've got your UIF there and any interest or penalties that you have to pay because you've submitted it late. And then it works out what is the payable amount at the end of the day. So if we take an example now of how you would complete the EMP 201 return, I've given you 3 staff employee numbers. Their gross salary is 25,000, 12,400, 34,800. I've given you the pay-as-you-earn deduction, but instead of the UIF contribution and SDL contribution, I've given you the remuneration amount. So you first have to go calculate what is the UIF contribution, what is the SDL contribution before you would be able to complete the EMP 201 return. So what percentage would we apply to the UIF remuneration to work out our UIF contributions? Okay, so let me repeat that. What percentage do we need to apply to the UIF remuneration to work out the UIF contributions? Who can tell me? Okay, so Queasy thinks 1%, Michaela thinks 1%. Okay, let me ask you, when we did the salary journals, did we have 1 or 2 columns of UIF? We had 2 columns. Why did we have 2 columns? Who contributed to the UIF? Yeah, that's correct, Kwesi and Tumelo. The employer as well as the employee. So when we do the EMP 201 return, both the employer as well as the employee's contribution will be paid over. Okay, whereas the SDL, only your employer pays it over, so that would generally be 1%. So let's just see. So you would multiply it with 1%, which is the UIF rate, but because of the fact that both your employer and your employee will contribute, you will multiply it with 2 to get to the correct UIF contributions, whereas the SDL, on the other hand, will only be the 1%. Okay, so that's the main thing you need to remember if they give it to you in this scenario and they ask you to complete the EMP 201 return, is that UIF contribution is for 2 people. It's for the employer as well as the employee, so we multiply it with 2 as opposed to just the 1%. So that's the little trick with this specifically. And then it's always limited to 14,872 when their gross salaries are more than that amount. Otherwise, if it's less than that amount, you use the lower amount. Okay, so that is also something which students tend to forget. Okay, now the total would have been 84,842 Rand and 88 cents and 722 Rand. Now let's quickly look at, and the pay as you earn, if you add it all together, gives you 12,000. Now, if we take that information, how would we complete this form? So I've just extracted the relevant information. In your pay as you earn liability, you would include the 12,000. Because we do not have a ETI deduction, the full amount will be payable. Then your SDL would be 722 and it will be 722, and the same with the UIF, which means your total payable, okay, sorry, that just needs to be down here, would be 13,961.88, and that's your payroll liability. So this amount, this total here, should agree to your EMP 201 control account, because that is what you have to pay over to SARS. Okay, so this is just how you would complete that information. Okay, so what we're going to do now is we're going to do question 8.6 and 8.7. So what we're going to do is we're first going to record the transactions into the wage journal, and then once we've completed the wage journal, we're going to transfer it into the general ledger account. So question 8.6, you can find it in your textbooks. Let me just quickly see where it's in mine. I can give you an indication of yours. Okay, so my textbook, it's on page 245, so it should be in yours on 249 about. Okay, so what this question asks you, in question 8.1, we calculated Sarah's gross wages. Then they say use the answers of 8.1 to complete the question. So they only give you the weekly pay as you earn is 2,541. She contributes 630, and then towards a pension fund, her employer contributes 1 Rand 50 for every 1 Rand, and then she to a pension fund, and her UIF remuneration is 10,500 and STL remuneration is 9,120. Okay, so the information we need to get out of question 8.1, let's quickly page back to that. So that is the question we did in class last week. So we said she worked 40 hours at 160 Rand per hour, and then her overtime rate was 1.5 times the normal rate, and she worked 53 hours. So that information you will also require to calculate your wage journal. So I'm going to give you 5 minutes to just complete the wage journal in your workbooks, and then we're going to discuss it, and then we'll move on to question 8.7 once we've completed the journal and how we transfer it to your general ledger accounts. Okay, if you've got questions, just type a question there in the chat function and I'll answer you.